Bitcoin has seen an explosive 24 hours with a parabolic rally to 67,000. In today's video, we're going to be discussing exactly what you should be paying attention to, what to expect next, the macro charts, and the possibility for a parabolic season. This is a video you don't want to miss. Let's dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the recent rally for Bitcoin, the macro charts, the parabolic season, and so much more. By the end of today's video, you will have a detailed and well-rounded understanding of not only what is happening, what to expect next, but also the key levels that you should be paying attention to. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, trading chart and education chat, trade setup, news, help, and daily video chat. If you're interested in joining that with over 600 members, contact me in the pinned comment of the free channel by clicking my name or click these links for more information. Let's go ahead, guys, and dive on in. So as we can see, in the last 24 hours, Bitcoin has seen a phenomenal move upwards to the $67,000 major resistance. And it's not only retesting the major resistance, it has retested the mid-level, the midline of the horizontal macro consolidation. Furthermore, we have seen the first breakout of what has been a consecutively large amount of lower highs develop on the higher time frame. We have had our initial high, we have had a lower high, a lower high, a lower high. We have finally seen a break of that lower high structure, indicating the first sign of real strength has developed on the price action chart. Again, in today's video, we have a lot to discuss and we'll be jumping into it. Starting on that market data, the 24-hour volume is up 27%, sitting at 156 billion. 24-hour liquidations are up 8.97%, sitting at 154 million. Of the 154 million in liquidations, 44 million have come from long positions and 110 million have come from short positions. Moving over to the broader markets, we can see the DXY has taken a nosedive towards the downside as a consequence of relatively bullish CPI data. With this DXY dropping, we have seen risk assets, again cryptocurrency, and the stock market see a significant rally upwards. As we mentioned, DXY has broken down from a yearly level of support now, which increases the likelihood of a further correction towards our major area of support. Again, dropping DXY is generally bullish for risk assets, whereas a rising DXY is generally bearish. If we do take a look at the recent CPI data, although that actually did come out on forecast, which is generally neutral, the market still had a very positive reaction to it as a consequence of the recent releases, which have all been slightly rising. So showing us that the overall forecast has actually been on par is a preliminary indication that the threat of raising inflation is now actually coming to a plateau and monetary policies are starting to kick in and effectively work. This increases the likelihood that in a later date, we're going to see those future interest rates reduce, which increases, or should I say decreases, the perceived systematic risk in the market, pushing risk asset prices upwards in the short term, and thus the market responded positively on the short term. Overall, let's take a look at the broader markets. So S&P 500 is looking really good over here with 1 day and 21 hours remaining on that weekly candle close. We can see the S&P 500 is in fact retesting that high point of the prior consolidation, the prior leg up at around 5,330. In fact, we are peeking our head just over that level. A weekly candle close above that level will be incredibly bullish for S&P 500 and could trigger a macro continuation upwards to as high as 6,000 on the macro chart. As we have been saying, team, While we remain above that 5,000 level, we are expecting macro continuations upward for the S&P and for the Dow Jones. Overall, looking fantastic. Moving over to the Dow Jones, it is lagging behind the S&P just a small amount, but again, it is looking very, very good over here, provided we remain above 38,000 to 37,700. We are expecting those macro continuations upwards, with this neckline resistance being the trigger for that continuation upwards. So we have so much to talk about today, guys. We're going to quickly go over the topics we're going to be discussing and then jump into it. So we're going to be discussing, most importantly, the weekly candle close, what is happening with the weekly chart on Bitcoin, what is happening with the weekly chart on the total cryptocurrency market cap. We're going to be going into massive detail on the short-term price action, discussing exactly what you should be paying attention to, the possible next moves, the significance of this high time frame range, and discussing again the probabilities for moves to range highs or range lows. And most importantly, we're going to be going over the macro charts in regards to the upcoming parabolic season and some very important indicators you need to be paying attention to. So before we get into any of that, a quick word from BitUnix and we'll dive in. I'd like to introduce our partner, BitUnix. BitUnix is a global non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump in, and what we can see here is something absolutely fantastic, and that is Bitcoin has engulfed the opening price of the prior red weekly candle. And although we have 4 days remaining until the weekly candle close, and thus it is too soon to say for sure this is going to be a bullish engulfing candle, we can currently see this weekly candle is engulfing that candle, which is a sign of high time frame strength, and most importantly, a sign of a reversal. And this reversal is developing at the key level of high time frame support, which is that $60,000 region. As you know, 60,000 is going to be the high point of the initial top in 2021. In fact, this is the pi cycle high from the 2021 cycle and a key level of high time frame resistance. What we saw in the 2021 high was a break above this region, but we have failed to sustain above that as we broke back underneath this, indicating we saw deviation and thus entering a macro downtrend. A lot of people were being cautious that we were going to see deviation underneath 60,000, triple topping and seeing a similar scenario to what we saw in 2021. However, what we have seen now is we have seen a strong bullish reaction from that $60,000 low, not only resulting in what is appearing to be a potential bullish engulfing candle, but a strong support resistance flip of that high time frame area of support. And as we know, this area is now going to be acting as a support and a potential trampoline point for the price action to continue upwards on the macro, a macro reversal point. So it's very, very important, guys, you pay attention to the upcoming weekly candle close, pay attention to the closing price. We want to close above that 64,100 level. Specifically, if we really zoom in, it is sitting around $64,050. If we are able to close above 64,050, we will have completed a bullish engulfing candle, which increases the probability for that macro continuation upwards. Again, while we remain above the 60,000 on the weekly chart, we are still completing a support resistance flip, which is bullish consolidation above support that will facilitate a macro continuation upwards. It is only if we lose the weekly candle underneath that 60,000 region do we enter a high time frame downtrend to 57 to 56k. Let's move over to the total. Moving over to the total, we are seeing a very similar scenario play out. The total cryptocurrency market cap is doing essentially what the Bitcoin chart is doing here, which is a support resistance flip on a high time frame area support. This is sitting at the $2.2 to $2.3 trillion region. What we can see with the current candle is the current candle is also seeing a bullish engulfing candle of the prior red weekly, breaking over the opening price at 2.3 trillion. And therefore a weekly candle close above 2.3 trillion will indicate we have seen a bullish engulfing candle develop from an area of high time frame support, validating a support resistance flip, but of course indicating the possibility for a macro reversal from that point, which can act as a base point for a macro continuation upwards. Again, while we remain above this low of 2.07 trillion, we are macro bullish for cryptocurrency. If we drop a weekly candle under there and close a weekly candle under that point, we enter a macro downtrend for cryptocurrency as a whole. Overall, guys, looking really good. Let's go ahead and jump into the short term on Bitcoin. So Bitcoin has seen a phenomenal rally over the last 24 hours. If you have been paying attention to the channel, guys, you would know we told you we were expecting a correction from the $60,000 region to 61.6. We saw that short-term correction as we told you, and as we even posted in our VIP channel. If we move down to this trade over here, right over here, we took a long from the 61,600 level to the 65.5k region, and we saw that long play out perfectly. We told you guys we were expecting a continuation upwards from here into that 65.5k region. Excuse me. In fact, we went a little bit higher. We have seen a break into that major $67,000 resistance, but most importantly, we have seen a retest of the dotted trend line. Now, the dotted trend line, as represented here in the middle of the channel, represents the middle point of the high time frame consolidation region we can see here on Bitcoin between the range high and the range low. The dotted trend line is the exact middle point between that range high and the range low, and acts as a zone classification point, but also acts as a trigger point for shifting probabilities for directional moves to range highs or range lows. What does that mean? It means that while we are above the dotted trend line, we are in the bullish zone. While we are below the dotted trend line, we are in the bearish zone. And just because we are in the bullish or bearish zone doesn't mean we're going to see macro downtrends or uptrends. It more or less signifies that while we are in the bearish zone, the probabilities for a range low retest, okay, a range low retest is greater than the probability for a range high retest. While we are in the bullish zone, the probability for a range high retest is greater than the probability for a range low retest. So all it does, it signifies the probabilities for directional moves and continuations to the range high or range low of the structural pattern of which we are sitting in. It doesn't tell us we are going to go there. It tells us it's a greater probability we will, as opposed to not. So this is a very important area. As a break above this level increases the probability of a range high retest as opposed to a range low retest. And as you know, guys, if we retest that range high yet again, we will be retesting that range high from a position of strength as opposed to a position of weakness. If we move to the daily chart over here, we can see that first retest of the range high, which was the deviation, we had a bearish divergence. This is our bearish divergence. This is an indication of weakness. Our second retest of that, we were in that overall RSI downtrend. We were in that downtrend on the RSI, again, signifying that even at our second retest, we had negative momentum. We had negative momentum on both attempts out of the 73k region. But what are we seeing here? We're seeing for the first time, we would be retesting this position at 74 from a position of strength as opposed to weakness if we retest it again. And if we retest it from a position of strength, the probabilities for a directional continuation above that resistance increase as opposed to not, and thus a retest of this region would massively increase the likelihood of a break out of that region, and thus a entrance into the parabolic phase for Bitcoin. Now, there is a lot more to discuss, so let's jump into the short term. What we can see, guys, and what we need to see for a continuation upwards to that region is going to be a break of 67,000. 67,000 is the current red zone, which is the current level of horizontal resistance, as you can see, which is preventing Bitcoin from moving any higher. We need to break above 67,000 to see that macro continuation upwards, to retest that range high, and thus continue much higher. As you can see, annotated by the chart here, the $67,000 region is a bullish trigger point for a move to the range high, and thus this area now is an area of resistance. So if we break above that region, we are expecting a continuation upwards, but until then, we are retesting an area of resistance, and thus we do have a possibility for a correction. So let's talk about this now. Let's go down to a very small time frame and discuss. What we can see in the last 24 hours, Bitcoin has seen a phenomenal rally, right? A very, very strong rally upwards. We can see the price action has almost been vertical into this region of resistance. If we take a look at the current VRPV range, we can see from the structural patterns of Bitcoin, we've had again a high, a lower high, a lower high. This is our prior lower high, the first breakout of the lower high. We can see that lines up with a price point on the 4-hour chart of exactly 64,500, which again is sitting above the $64,000 opening price of the weekly candle. So it is a viable retest point. And thus what we are expecting in the short term is two things. Number one, if we do not break above this resistance, we are expecting a short-term correction towards that high point, which is going to be 64,500, to retest this VRPV range as an area of support before a continuation upwards. So if you do see a breakdown into this range, this is going to be an ideal bouncing point for Bitcoin for that continuation higher. If the bears want to take control of this price action, and by take control, I mean push the price action back to the range low at 60,000, they need to break the price action underneath this uptrending diagonal support, which is going to be very difficult. It's going to be very, very difficult for the bears to do that, considering we have now broken out of this structural downtrend. It's going to be very hard for the bears to take back control. So in the best case scenario for the bears on the short term, they push down to 64.5. and then the bulls step back in, okay? Worst case scenario, if the price goes all the way to this trend line, again, we are still expecting continuations upwards. If only we break below that trend line, that is when we expect continuations downwards to the 60K region. So short term, break above here, expect continuation upwards. While this acts as a resistance, the possibility for a correction to 64.4 is on the table. Let's zoom out one more time and discuss higher time frame targets. If we look at the current horizontal range, we can take a very simple measure move from the range low, okay, to the range high and apply that to the breakout. As we've been saying, guys, these horizontal consolidations or any consolidation that happens on the macro, the bigger the range, bigger as in length and depth, okay? The bigger the range, the more violent the reaction out of the range. So when we see this 20% reaction, this 20% range, and we're not looking at percentage, we're talking about, depth in terms of length, okay, not percentage. We apply it to the breakout. We can see the directional breakout could take us up to around 84,000 as a target from this range, which is a very, very bullish target for Bitcoin. Whereas a breakdown from that range could take us as low as 48,000. However, as we say already, measured moves do not give us specific targets. They give us a directional continuation to the next area of high time frame support or resistance. So, since we have no data above 74,000, we don't know where those resistances are going to be. We're in price discovery, so we have to take the measured move as a face value target. But when we're looking at measured moves toward the downside, we do have data. And what we have here is the bull run uptrend, the uptrend of the bull run. This is a 7-month-long uptrend. We will be expecting a retest of 52,000 if that level were to break down. So keep that in mind, guys. Macro looking very bullish, short term looking very bullish. Worst case scenario here, we see a short-term correction. We could see that correction to retest that 64.4K region. Other than that, if we break through as a resistance, expect macro continuations upwards. Let's go ahead now and jump over to the macro charts. So guys, finishing up with this chart over here. And forgive my voice, guys, I am a little sore today, a little sick today, and this is actually the second time I'm filming this video. Believe it or not, I didn't have my mic on the first time, which wasted like an hour of my life, but it's okay. We're in here to get this video out for you guys. There is one particular chart I want to take a look at, which is on the weekly chart, and two indicators. First and foremost, we talked about this last time, but I want to go over it again because it's absolutely significant, guys. It's super significant in talking about the parabolic season for Bitcoin. If we take a look at the weekly chart, which has the overlay pi cycle indicator, and at the bottom, the Vortex trend indicator, what we notice is that the Vortex trend indicator has got a macro downtrend that peaks at the same time as we get these pi cycle high points, okay? The pi cycle highs match the Vortex trend indicator highs. So we can assume that two things. Number one, we will see a top on the pi cycle indicator once the Vortex trend indicator reaches this downtrend. And number two, we will see the price action reach a macro high once the Vortex indicator reaches the high point and thus creates a pi cycle high. So therefore, while neither of these two scenarios have occurred, it technically means, according to these indicators, we have not yet seen a top for Bitcoin. And if we have not yet seen a top for Bitcoin, we could see a continuation as per what we have seen historically based on technical levels. And that takes us to the current 3-point verification method we have seen for prior parabolic phases. If we take a look at the prior cycle, we saw at the same time the price action retested the prior high, it retested the upper band of the pi cycle. It did that as the lower band was breaking into the Ichimoku cloud, and while that was occurring, the price action was above the midlines of the pi cycle indicators. From the point of which the pi cycle was broken into the pi cycle lower band breaks into the Ichimoku cloud onwards, the price action remains above the midlines of the Ichimoku cloud until it breaks down. And when it breaks down, it not only breaches or reaches again the Vortex trend indicator high, but it creates the pi cycle high. So we see, again, when the lower band breaks into the Ichimoku cloud, we see macro continuations upwards into the parabolic season until the pi cycle high is topped, the Vortex trending indicator tops, and the price action breaks below the midlines of the pi cycle indicator. That's the 3-point verification method. We saw that in 2021. We saw that in 2022. We'll show you again. 2022, let's zoom out. Again, pi cycle high up over here. Matches the Vortex trend indicator. When we're retesting the prior high, we retest the high point of the pi cycle. The lower band breaks into the Ichimoku cloud, and the price action remains above the midlines until it breaks down and enters a bear market. We saw that in the 2015. We saw that in 2017. We saw that in 2021, and we are seeing it again, guys. Look over here. We are retesting again the pi cycle high. At the same time, we are retesting the prior high point. The lower band is breaking into the Ichimoku cloud. The price action is above the midlines, and therefore, while all these three things are occurring and the pi cycle high has not occurred, we can only assume we're going to see a macro continuation as what we have seen in the past, thus entering us into a parabolic season. The parabolic season for Bitcoin is here, guys. We were only going to invalidate this if two things occur. Number one, we see a pi cycle high, thus the Vortex indicator reaches its point. That would be invalidation point number one. And number two, we would see invalidation of the prior trend, which would be a weekly candle close underneath the pi cycle midline indicators, invalidating this pattern that we have seen in the past, telling us that a macro downtrend is starting sooner than what we have seen before. Thank you for watching. Have a fantastic day, guys. I'll catch you guys in the next video tomorrow. See you then.